Today I want to talk to you about a concept that can confuse some folks, and it really shouldn't be that hard, and that is the idea of self-insured versus fully insured when it comes to employer-sponsored health insurance. Now remember, most people get their health insurance through their employer or through a union or some other group plan like that. When you're talking about fully insured plan, think of your car insurance or your homeowner's policy. You write a check to the insurance company, whether it's the Gecko or State Farm or Allstate or something like that, and that's for the premium that you are going to be charged for your 6 months or for your year. You write it to them, and then they take care of the risk. If you get into an accident, if your house has a fire, they pay the claim, subject to your deductible. But in other words, you're writing a premium check and you're getting the risk shifted over to them. Now, the concept of health insurance is the same thing. Your employer writes a check to a health insurance company like an Aetna or a United Healthcare, one of the Blue Cross entities, and they do the same thing. The claims get submitted and the money comes from that insurance company to pay those claims. And if you get sick or if you need to have a bariatric surgery and you make the request to Aetna, for instance, and it's a fully insured plan, Aetna is going to be the ones paying the bill if it's covered. Easy enough to understand. Think of it like your health insurance, and think of your health insurance like your auto insurance. Self-insured plan is a little bit different because the entity that is taking on the risk of paying the claims is usually your employer, usually a big employer, or a group of folks like a union trust or something like that, where they pool all of their assets together, premiums get paid, and the claims are paid from the pot of money that's created by that self-insured plan. It's usually a strategy that's adopted by a lot of larger employers, but it's a strategy that can be done by small and mid-sized companies as well, and you see it pretty frequently. Now, what gets confusing is that if you work for a bank or if you work for even a hospital company or anything like that, you don't really know that much if you're in that business about how to process insurance claims. So what do? You pay somebody to administer those claims, and that somebody is oftentimes an insurance company, a Cigna, an Aetna, a United Healthcare, one of the Blue Cross companies, somebody like that. So here it comes, you get an insurance card and it's got Blue Cross Blue Shield of Illinois on it, but you're not dealing with Blue Cross Blue Shield of Illinois or a Cigna or an Aetna or what have you. You're dealing with a self-insured plan. The insurance company is actually just processing the paper. They're making a decision as to whether or not the claim should be approved before surgery, whether or not it should be paid, and how much it should be paid, but the actual money comes from the self-insured plan. Now that's important because the rules on appeal will really change depending on if you're dealing with a fully insured company, because that's usually subject to the state laws of insurance for each state that that plan is located in, or if you're dealing with a self-insured plan, oftentimes you're dealing with federal laws and you may have a whole different set of rules that govern your appeal, and you may have a bunch of different players. You may submit your first couple of levels of appeal to the Aetnas or Cignas or whoever that claims administrator is, but ultimately there may be a benefits committee or something that works, that are employees of the actual employer group, the self-insured plan, who will be making the final decision on your claim for bariatric surgery, whether it's pre-service or post-service. Oftentimes that will make a difference as to what rules of appeal have to be followed, what the time frames are can sometimes be different. It can create some complexities, and maybe the most important complexity is that Aetna may have, for instance, a set of criteria. They have a medical policy, number 157, that they use for their fully insured plans, what they consider to be medically necessary. And we'll talk about medical policy and insurance policies in another video segment, but Aetna may not be utilizing its own criteria when they are acting as a claims administrator for a self-insured plan. That self-insured plan may set up a different set of rules. And so if your insurance card says Aetna, for instance, you may think, oh, well, I'll go to Aetna Medical Policy 157 and see what the rules are for bariatric surgery, only to find out that you get a denial because the rules for your self-insured plan are different. It can be confusing. You could use some help. We're certainly there to help you. Again, our phone number toll-free is 1-877-99-APPEAL. Feel free to reach us at WLSappeals.com, where we have information on our website that may be able to help you. So I hope this helps clarify a little bit about self-insured plans versus fully insured plans. Please shoot us an email or make a comment on the YouTube site and let us know if you have further questions that we can clarify. And have a great day.